There's really only three investable areas of technology anymore, and it's AI, it's biotech, and it's crypto. Like, that's it.
We're very clearly not in the let's look at DeFi Llama and see what to buy anymore. It's like, okay, who's buying what in size?
Is this because stablecoins are coming to eat their lunch, or these issuing banks that are backing these stablecoins are kind of in trouble?
Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Rob, good to have you. You are the other half of Dragonfly, which we know our famous or our infamous Hasib clip on him calling the top on proof of stake was the one to remember from permissionless, which I suppose because of DATs he's now reeled back in. But it's good to have you on. I've been watching a couple of the Empire roundups. Good to see you there as well. And yeah, man, how you doing?
I'm doing well. Thanks for having me on. It's a bummer because the market's like melting down the last few days. So I was like really excited. You hit me up on last week, and I was like, the markets are doing well. Good Jackson Hole conversation, and then the last 2 days have been a real bummer. But we are where we are.
Yeah, you kind of called it though in one of your tweets. I think after the flush, you were like, "Weekend pump into the leverage flush is just classic." Classic.
Yeah, and it's happening again here. After I think the equity markets were pretty tough today as well. So, but we'll get back to it.
And Rob, do you think this is kind of a blip on the radar, given the more dovish Jackson Hole sentiment? Are we going to start to see some more structural changes in, general monetary policy, and that's gonna take its effect, or are we starting to front run whatever the next thing is? If we're dovish now, we're going to be hawkish later, and we're starting to see that turn out.
I think what you saw in the market, and I was just actually chatting about this with a few really smart traders that I know, the initial reaction on Friday is everybody was excited about the dovishness, and they were surprised. They were a little bit caught off guard or caught off sides. There's, I think, an expectation that Powell will continue to be a little bit hawkish, and that maybe there would be some downside there. He was surprisingly dovish, and he also indicated maybe a change in the way that the Fed is going to think about monetary policy going forward. So the initial reaction was, way into the upside, right? And we saw just everything rip. Right after that happened, in a lot of the conversation Saturday into Sunday from a lot of the macro traders that I am close to and that I think are quite smart became, well, what does this actually mean about the future of monetary policy in the U.S.? What do we think this means around potential effects on or knock-on effects on the economy over time? Do we think like higher inflation over time, is that net negative for potential growth, and is that going to eat into the EPS of a lot of these companies? And I think what we're seeing right now is the kind of just understanding that maybe that change that Powell indicated on Friday is not actually good for growth over, call it the next 12 to 18 months. And so we're seeing that a lot of that initial kind of pump retrace because of that. That makes a lot of sense.
I think the sentiment here was like, okay, we're starting to lower rates and inflation is still above their target 2%. And
I think Powell told you he's going to probably forget about the 2%, or 2% is no longer, the mandate, right? And if that's true, then what does that mean for, and how does that permeate through the rest of the economy? And I think there's maybe an expectation from a lot of people that like 2% was still a goal. We would get back down to it, which is maybe, higher for longer was the story. And now it seems like the story is like, well, maybe it's just higher forever. And what does that mean?
Is that the hyperinflation? Bitcoin is the alternative. The denominator is going to zero. Like, this is really playing out. This isn't just a meme.
Yeah, I mean, listen, it's maybe it's not hyperinflation, but it's 3%, but 3% leads into 4% eventually, and I think that's the concern, right? And I think as I think about it, there's also a concern about, well, what does this mean if assets continue to inflate, but things like incomes don't inflate, right? Or it becomes, you start to see that call it this like wealth disparity that has existed kind of continues to blow out, right? And if that blows out, we see a lot of the gambling behavior that we've seen, or a lot of the concerns around just, how does like the new generation make it, right?
Yeah.
And that can eventually, if you take it out long enough, can result in just, unrest, right? And like broader issues globally.
Well, I think you're speaking to him, Rob, and I think The answer is hop into the metaverse with your AI VR set, get your Pizza Hut delivered, and have your dopamine sent to you via Neuralink, or fight your way to make it to the Citadel. So one way or the other. But Rob, you brought up a good point that I think that the mindshare of crypto Twitter at least has been orienting around, which is this kind of hyper financialization with regards to prediction markets. There's been a lot of talk about that the last, I don't know, 72 hours really. Even like the last week, the Polymarket CEO DM'd me and was like, "Yo, man, why is there so much talk about prediction markets on the timeline now? Like, what's going on?" From your perspective in the venture seat, are prediction markets, or what we've seen on the venture side with our small fund, is more of like interesting spin-offs of them with, either opinion markets or conviction markets, different time-based decay functions, different outcome functions. Is this something that's interesting to you from a venture perspective? How, and I also put out a tweet, like, how do I get exposure to prediction markets? Is this a trend that you want to invest in? Like, what do you think about it from a personal portfolio, and, perhaps how is Dragonfly thinking about it?
Yeah, so Dragonfly is a relatively large investor in Polymarket. And so, we have exposure there. I can't say that we've done any of these spinoffs, and we've seen all of them. They've crossed the desk. I find that if you take like a really successful platform like a Polymarket, and then you say, okay, well, I'm going to splice it up into like, verticals, and, try to like kind of win at that vertical. I don't find that typically in most cases has, is able to get the right, kind of funnel in place, right? You can't pull enough people you can't pull enough eyeballs. Maybe you can get like a really good like core group of, like sports gamblers to come to your sports gambling website that is, focused on that. We've seen, I think there's like a football one that Six Man is back that has been out there.
Football.fun.
Yeah, right. So there's things like that maybe that really is interesting for like a really hardcore group of users, and you see them move there. And as we all know in platforms like this, like 20% of the users are like 80% of the volume, right? And so you really have to focus on that hardcore group. But I think broadly, these platforms, whatever can get the most eyeballs in, are the ones that usually typically win. And that's why you see, who's gotten the biggest. It's Polymarket, it's 𝗪𝗪, it's like people like this. So we haven't backed any of the what I would call the more verticalized ones, or the more, I guess, like smaller market ones, like opinion markets and things like that. But not to say that they won't be successful. It's just been, as we think about venture outcomes, addressable markets, it's Polymarket's been where we put our play.
Introducing Extended, exclusively on Starknet, a next-gen perps trading platform live today. With 50-plus trading pairs from crypto to TradFi, you get the best experience on-chain today. Deposit in the community vault for attractive returns, EMV compatible, and engage in unified margin, spot trading, lending, and perps trading. Exclusively live at extended.app on Starknet today.
Yeah, I mean, I think we've been ideating on it as like a crossover between media and these markets. Like if there's a way in which you can come on, Rob, today, you have a take, like, we ask you about a Solana DAT or something, and you have a take, then we can just go directly take that take, make a prediction market for it on Polymarket, or on a, it may be easier to do it on a smaller one if there's some like liquidity grant, et cetera, right? And then we can then create this interaction with our audience such that they're betting on your takes that just happened on our show today. Let's say the outcome is a month away. Then all of a sudden, like, now we've created this kind of relationship where our audience can make money consistently or lose money based on the takes of the guests, and whether or not like we agree with it, we disagree. They can kind of like tail us or fade us. So just kind of like ideating on like, okay, if we know a couple things are happening, one is that everything is going faster, attention spans are going lower, and people want to be, actively participating in some sort of financial way, then it's like, it's all roads lead to like some sort of way to basically allow your content consumers to participate in the speculative upside or downside of your show. And so, yeah, we've just been running through experiments on thinking about how to do it.
Yeah, listen, I love the idea. I think you have an Oracle problem, right? And there's nothing people like hate more than saying, okay, well, I put my money behind this thing. Now I think I'm right. And now they're telling me I'm wrong. And like, now I feel like I'm rugged. And like, that's the problem you have in these things all the time, right? Is like, if there's an opinion, or if there's like unclear, like, Oracle resolution, right? We've seen it with Polymarket, with 𝗵𝗶𝗴𝗵. People get, quite upset over the 𝗬𝗫𝗀 suit conversation.
Yeah.
Right. And there's like hundreds of millions of dollars on the line there. Like now you start talking about like, okay, well, I say something about, let's take a take that I've had over the last couple of months, which is that like, I think like X stocks is not a product that like people are actually going to use on chain, right? You can go look at the data right now and you can tell me, oh, well, people are using it. It's doing $3 million of daily volume, right? And I could be like, well, $3 million is like absolutely no volume. Like what I said is correct. And there's those problems about how you resolve those things, right? And differences of opinion. And so I think the more you have Oracle issues or the more you have like subjective resolution, the more people are going to be upset in, these types of markets. And if people lose money and they think it's unfair, like they're just not going to come back.
And Polymarket is hilarious for this exact reason, because they, whether you call it shooting themselves in the foot or simply just not caring, they list markets like, is Earth flat? Or will Jesus come back this year? Like, they do just absolutely ridiculous markets because people find them entertaining. And then they sort of deflect all of the responsibility onto 𝗵𝗶, and 𝗵𝗶 just takes it. Like they're the Oracle, they're the resolution engine and the source of truth. I also think that, Andy, to your point about media and the way that this combines and converges a show and its audience, I'm pretty sure All In, the podcast with Chamath and Jason Calacanis, these guys are already doing this on Polymarket, which is really cool to see. I've also seen Zero Hedge, some other Twitter personalities, start to list their own markets on Polymarket. And so it's really cool that Polymarket is doing this. 𝗵𝗶's got their hands full for sure.
Yeah.
But I am really, really looking forward to user-generated markets within reason. Obviously, you can't go all the way into the Augur scenario where they have assassination markets and all this crazy stuff. But user-generated markets, I think, is some nut that one of these prediction markets will crack.
Yeah, listen, I think if you ask Shane, like he'll tell you, like he wants to be the information oracle for everything, right? Like he wants to be the market for everything, and that's what they're trying to do, and they're trying to thread a needle, right? Like you go look at the 𝗬𝗁𝗘 resolution scenario, and how do they do it? It's entirely subjective, based on an internal body that they have that does that, right? And Polymarket's the other end of the spectrum. Like they're trying to use a decentralized like third party like 𝗵𝗶, right? And there's obviously been at times debate about whether or not that works, right? I think what's clearly true is you don't want entirely like some subjective third party from a regulated business to do it, and maybe at times 𝗵𝗶 hasn't worked. And how do we find the right part of that spectrum is, I think, still a work in progress that everybody's trying to figure out.
Yep. Rob, kind of shifting gears here to some of what's happening in the broader kind of market here with these treasury companies and with the just broad kind of adoption of Bitcoin, Ethereum, and quite a few of other assets. Yesterday, there was news that I think Jump, Pantera, and Multicoin are looking to raise $1 billion to buy Solana in some sort of treasury vehicle. I've been tweeting out that I think Solana is next on these. I'm not asking you for any information that you're privy to, but I think inside of the circles, people know that Solana is, or that some sort of treasury companies are coming for Solana. I think it's just like the logical next step, and then leading into the other assets. I think my main question is kind of where do you see us in the scope of this entire paradigm? And I ask because about three months ago, I put out a tweet that was like, we're in the revenue meta. Like everybody cares about revenue. They're like, and that kind of blew up, and I got a lot of flack for it, and it became a term on crypto Twitter. And I'm equally embarrassed as I am proud of it. It's quite a silly thing. Yeah. And so that poll blew up, but like I think we're very clearly out of the revenue meta and into the DAT meta. Now, obviously, it still persists, and everyone's excited about Hyperliquid's numbers and Aave's numbers and et cetera's numbers, but like we're very clearly not in the like let's look at DeFi llama and see what to buy anymore. It's like, okay, who's buying what in size? And so like I'm just curious, like in this transition, like where are we at? Do you think in this kind of treasury company accumulation meta or concept? Has your views changed over the last several weeks to months? Like how are you thinking about this at large? And then we can kind of get into some of the nitty gritty.
Yeah, well, I would say two things. So first, I actually don't think we're out of the revenue meta. I do think people are distracted by the digital asset treasury companies. There's just a lot of the volatility, at least to the upside, has moved from the tokens and into these digital asset treasury companies, especially on Bitcoin. Actually, Bitcoin vol has been somewhat depressed over the last 2 months. I think so. If you look at what's done really well in the token side, like Athena, Hyperliquid, Aave, these things that are doing really well in DeFi, and so I think that continues to be true. On the treasury company side, listen, it's clear that across crypto there is a lot of interest in these. A lot of the people who you probably see it in your group chats. It's not just the VC funds or the trading firms. It is also your average whales or your average retail traders who are if you go into your group chat, they're talking about SBET, and they're talking about MicroStrategy, and they're talking about Bitminer and all of these things, right? And so I think it's pretty obvious that people want to move where volatility is, and things like SBET have honestly traded shitcoins at times, right? And you've seen the price move 70% in one day, which is you don't typically see in equity markets, right? And so that's been interesting to see. I think to your point, there's a somewhat, in terms of the private investors or the people who are doing the pipes, the people who are doing the converts, I think there's exhaustion a little bit. There's been so much of, or so many of these that have come out. Solana, obviously, to your point, a lot of these are coming out, but there's, I think there was another BNB one that was announced today, and then there was a BNB one that got delisted last week. Yep. And then if you kind of, pull forward everything that, we're seeing happening, I would expect that you're going to see a couple of these for every asset in the top 20 or 30, and even some, kind of beyond that, or at least they'll try to make that true, right? And if that's true, how much private capital is there to invest in these things? I think we're, maybe in this lull or this dip where people just feel tapped out, especially the crypto native investors who have participated in a lot of these. And so we need to get more interest, more capital from the traditional investors, the Wall Street investors, and not just the Jane Streets of the world who are gonna invest in your pipe or invest in your convert and then hedge you on the perp to the downside and trade out immediately. But you have to get longer term investors. But I am starting to see a little bit, and I think this will probably pick up post the August lull when volumes are really, really far down. Some of the traditional financial firms on the street who are starting to think a little bit more thoughtfully about these and not just and take more of a notice and not just saying, okay, well, there'll be an ETF someday and I want exposure that way. So I think we're in the 7th inning, but I don't think it's over.
Yeah. Rob, I take it you guys are one of the longer term investors in this space. How much do you balance liquid versus VC and the time horizon that comes with that? And then also, if you're not too distracted by some of these digital asset treasury companies or some of the short-term metas, what is your focus on a longer time horizon?
Yeah, so we have 4 venture funds. We're currently investing in our 4th venture fund, and we do have long only liquid fund, but we look at that book once a month. So it's not active trading. We're not trading in and out of positions. It's really kind of liquid venture, as people like to talk about. So with the DATs, we haven't really participated. We did publicly invest in one called TLGY or Stablecoin X, which was Athena's. And that's because we're already a very large Athena investor and we want to continue to support them. In places where we've played in these digital asset treasury companies, it's been things or tokens where we're already large investors and holders. And that's only place we're going to continue to play. We're not playing the premium to NAV game and trading in and around these. And it makes sense for, I think, some of the liquid hedge funds. That's not who we are. To your second question around, okay, well, what are we focused on? I actually think, it's a lot of the old narrative, right? What are blockchains good at? Blockchains are good at moving value and information, right? That is what they are good at. And every time, every cycle, people start to talk about, all of these things around social and gaming and other types of, AI and the other types of metas. And maybe the tokens do well and they pump and people trade around them. But where do we ever see PMF in those things? It's unclear to me that we have in really any of those, verticals. So we continue to do what we think, crypto is good at. It thinks about moving money. So, stablecoins, payments, DeFi, broad financialization markets and things like Polymarket, trading, infrastructure, right? So continue L1s, L2s, cross-chain infrastructure, messaging layers, wallets, right? The things that we think will continue to reinvent the global financial rails and will change the way that you and I interact with finance over time. that's where we continue to focus. And we still think there's a lot of things to invest in on those themes. And so we're trying not to get distracted around, whatever the shiny new thing is that crypto trader cares about today.
Yeah, Rob, are you seeing different types of founders come into the space? Like one thing, like let's say that there's these unsexy narratives that we all know that are the best use cases for blockchain, like 2017 type narratives that we all got bulled up on that are like now coming to fruition. Payments, tokenizations, RWAs, stablecoins, enterprise use cases, cross-border remittances, et cetera. Like very boring, but like very, very important. Like, are you seeing a next generation of like non-crypto native founders that you guys are being pitched by, or like maybe like ex-Stripe employees or like ex-Revolut people? Like, are you seeing a better new generation of founders that you haven't previously seen, or is there still like a brain drain into AI or a brain drain into other sectors because crypto is still not kind of like sexy enough?
So it's absolutely picked up again. Okay. So if you remember, 2018, there was a little bit of that. And then, Bitcoin went to 19K, back down to 3. And I think we lost that meta again. And in 2021, actually, the founder quality was tremendously high. But you'd get these kids who came out of Stanford and, they had, 4.0 CS degrees. And they're like, I'm going to do a Uniswap fork on, name your chain. Right. And you were kind of like, okay, what's the point? But all of those things were getting funded because everything was moving so quickly. Everything was doing so well. And then, obviously we had 2022, which was a tough time for all of us who were in the space. And we kind of had a dearth of talent. People who were very crypto native were still here, but that new talent, that new wave, really kind of disappeared for a couple of years. And then over the last, call it, year or so with, BlackRock and the Bridge Stripe acquisition and, just the excitement, since the new administration has come in, we've seen that, talent level for that entrepreneur pick up again, especially in things where, again, what blockchains are good at. So the tokenization aspect, to your point, payments and stable coins, like the amount of people I see from places like Stripe or like large payment companies, large financial institutions, it's really, really growing quickly. We funded a number of people this year who are, hey, I've always been interested in crypto, but we're coming out of this big financial institution. We've got a CS background. We've been doing crypto on the side, and now we're really excited to go full time because we feel like now is the time. And that was our investment actually in Athena, right? Guy Young used to work at Cerberus, right, which is a big private equity firm. And during 2021, he was like, maybe I'm not supposed to say this, but he was like degenning it up like on the side, the whole time. And then he was like, I want to be in the space full time. And he made that move when the market was, kind of at the bottom. But a lot of guys like him are now feeling comfortable making that move. And so we've been really excited about that group of entrepreneurs. That said, there is still competition with AI that has made, I think, it tough beyond maybe the financial aspects. So in those other parts where people have been excited about that, those people who aren't necessarily wanting to build, financial rails, they might still be going to AI. And so there's a bit of that brain drain.
Yeah, well, I just thought that like this next era of founders is going to, like I would be excited to invest in somebody, as you said, like a guy, obviously in hindsight, but somebody who's coming from that world and wants to work in crypto, but has that because they're not coming with the same baggage and mindset that a lot of the crypto natives kind of have with regards to tokens and projects and protocols. Like they're going to come in and they're going to try to build a real business. They're going to be a part of the revenue meta. They're going to generate revenue. They're going to figure out a way to either get it back to shareholders, token holders, et cetera, and build something that has immediate just immediate need. Now they might struggle with some of the culture and the vibes and the conferences, but you can always hire out for these types of things. But yeah, I think that is the big turning point. What I'm trying to get at here with the thought is even though we're still not early to crypto, the last 10 years is obviously the early phase. We're still early enough, but maybe with venture, investing in the 21, 22, 23 cohort has worked out, but maybe there's a whole new set of even better founders that we've ever seen in the space before, such that the venture cycle is almost restarting in a way where there's entirely new niches and sectors that will come in from better people, better ideas, more positive regulatory clarity that will make a lot of the current projects look small and like they were early in 5 years. So maybe the venture cycle is like almost restarting again because of the positive changes in the regulatory regime, as well as just the broader perception change, which is bringing in these new founders? I don't know.
I think this is going to be a really good vintage for new founders. I think the whole space is maturing. It's getting more sophisticated. There's more dispersion. So in 2021, everything went up. Everything either went up together or went down together. So, you could throw a dart at the wall and, you maybe over the right time period, you would make money, right? That's not true anymore. I think it's healthy because we want there to be dispersion. We want there to be, winners and losers, because that's how, we are able to differentiate between people who are building good, product with PMF and people who aren't. And, then the token becomes less of the product, and hopefully people focus more on the product itself and what they're building, right? Because I think there was always this meme on Twitter that the token is the product, which was unfortunate, right? But I think a lot of people took that to heart, and it meant that they didn't build for the future. Today, we're seeing a new set of founders who want to come and they want to reinvent the way money moves. They want to reinvent the way people bank, right? And that's exciting. And I think there's really only 3 investable areas of technology anymore, and it's AI, it's biotech, and it's crypto. Like, that's it, right? That's where all the growth is coming from over the next few years. And so if you want to build in the financial ecosystem, like, it's crypto, right? It's, AI, can help out, but like, that's the place where you want to be. And I think we're seeing a lot of, really exciting new founders who understand that finally and feel comfortable doing that because of the regulatory clarity.
Not a big robotics guy, huh?
Listen, I robotics, AI, I kind of put them together. But yes. So.
Rob, I got one last question for you before we let you go real quick, because you've spent so much time thinking about stablecoins and you're talking about reimagining how people are banking. You put out a quote tweet on one of the Wyoming stablecoin, which seemed to me like it was a big deal. It was a public. It was one of the 50 states launching their own stablecoin. But you kind of had a cautionary tale to tell about, kind of watch out for the issuer banks. Is this because stablecoins are coming to eat their lunch, or these issuing banks that are backing these stablecoins are kind of in trouble? What was, maybe you could just unpack that and clarify a bit.
Yeah. So what I was really trying to say there was, if you think about what an issuing bank is, and I'm sure a lot of your audience hasn't thought about payments that closely, but people or a bank, sorry, I'll back up a second. So in traditional payments, there's a 4-party model. The 4-party model typically has, call it an issuer, the person who's like issuing a credit card essentially, and is backing that credit card with credit, right? Now, what happened in that, Wyoming stablecoin was they were saying, okay, well, we're going to issue a stablecoin, so we don't necessarily need a bank, unless you need credit, right? And then we're going to allow you to spend that stablecoin if you get it, or we're going to allow you to get that stablecoin if you have social benefits or on your tax return. And then we will allow you to spend that stablecoin with a Rain issued card. Rain is a company that does like stablecoin backed cards, but they have their own like regulatory license essentially, so that they don't need a bank to issue that card. Meaning that all of a sudden now I can get my tax return from Wyoming in a stablecoin and spend it without ever having my money touch a bank, right? And that type of payment flow, we're starting to see more and more of, right? Like if you look at what Stripe has done, they said, okay, well, we're going to issue our own stablecoin. We're going to issue our own stablecoin backed card. We're going to issue our own virtual accounts overseas. And we're going to also acquire Bridge, which is going to be able to do the orchestration across everything. If you take all of that together, and now also, by the way, they have Privy, which is the account layer. You take all of that together, theoretically, you never need to touch a bank, right? Because like you can spend in your Stripe ecosystem with a stablecoin backed card for like a supplier that is also in the Stripe ecosystem, right? And so when I look at the future of payments, if they're happening on stablecoins, then you don't really need an issuer bank anymore, because the stablecoin issuer and the card issuer can be outside of the banking system, potentially. I mean, Genius Act, there's a lot of conversation around in the banking license, but you have companies who are able to get OCC regulated, and obviously Circle's trying to do that, and others are, right? And so I think the long tail, especially like the non-GSIBs, like the community banks, the call it mid-sized banks, I think they are in a lot of trouble. And you're seeing that right now with them trying to push back against the Genius Act in terms of potential yield, or this like workaround yield. So there's been this like rumor that's gone around, and I think we've seen it talked about on Twitter a little bit, that the banking lobby wants to not allow Coinbase to give you rewards if you hold USDC on Coinbase. It's because, and they're saying specifically that we think there's going to be deposit flight. We think people are not going to want to keep their capital in the bank anymore. And because they realize they are not competitive, right? And when they say they're going to be deposit flight, I say, okay, compete. And they don't want to compete. That's the problem right now. And so we're reinventing how banking should work, and they're trying to entrench themselves. And I think, the stable coin out of Wyoming and the rain card was one part of that. But I think the issuer banks are in real trouble over time.
This feels like the same thing that shut down the Facebook Libra project, because all of a sudden social media companies were going to go and innovate on banking, and probably another deposit flight risk, as you're describing.
Yeah, but the market's ready for it now, because we have we have this regulation, the Genius Act, and we have regulators and people in the administration who want to push forward this innovation, which is clearly better for consumers. Like, why do I care about the banks if they can't compete, right? And that's a long conversation. I'm sure somebody listening to this is telling me about local mortgages and things like that, and I get it. It's a nuanced conversation, but compete. That's all I'm asking for.
Yeah, Rob, I think if there's a world where we have like a full Stripe based payment rails from their own stablecoin, their own chain, to everything, to a card, to the POS system, to the issuer, et cetera, all like that would be. It feels closer than we think, but that would be insane. That would be that'd be great. I think the only thing that you may have maybe skipped over in the explanation was just that you need somewhere to hold the funds, which I suppose would be the chain, your account on their chain.
Yeah, I mean they're quite privy, right? So
right,
you have your wallet, and they have the virtual account, which is also is on chain, and now they're building their own chain in Tempo, I guess. And I mean right now Stripe does still use Lead Bank, which is kind of like a fintech bank for their card issuance. But let's say that the Stripe wanted to use Rain instead, and who has their own kind of regulatory license, so that they can go and issue this card without a bank. You don't actually need an issuer bank at all. The only bank that needs to be involved is holding your collateral for your stablecoin. That's it. And other than that, you can get rid of banks altogether. There's a question around how you get credit into the system, but a lot of people are trying to solve that right now.
Rob, we appreciate your time, man, and the insights. Look forward to having you on again in a couple months. Hopefully we can get some more interesting DAT shakeouts, developments, stablecoin payments, etc. Always a pleasure to speak with you guys from Dragonfly, Robbie, Hasib, the guys. So pleasure to have you on for the first time, and thanks for the insights, man.
Thanks, guys. I really enjoyed it.
Pleasure.
Cheers, man.
See ya.
Have a good evening.